Now, what about this is going into the profile of the portfolios, minerals portfolios you're taking to market? Is it typically very yield heavy and more of a mature PDP cash flowing portfolio? Is there a lot of development risk in there? Is it some sort of even balance? I'm just trying to figure out in the 1031 investment world, is there kind of bands or norms of return expectations and risk profile, or is it really different per product?
So there's several different ways to answer. Yeah, several different ways to answer that. Yep, I understand what you're asking me. So when we first started this, I mentioned early on that we dealt with a limited partnership structure. And this was 2011 up through 2015. Well, if you remember what the price of oil did then, I think we got up to 120. And then in November of 2014, it took a serious nosedive. So you've heard me say before, if you don't learn from history, you're doomed to repeat it. So what do we do now? At that point, our portfolios had been PDP heavy, and we had also been PUD heavy. And one of the metrics that we follow is the rig count. And so in 2014, I mean, we had 170 something rigs in Oklahoma. I don't know what it was nationwide, but it was, a significant number. So fast forward and we start seeing that, hey, maybe that strategy is not as successful as it had been because we've had a decline in oil price. So we changed our focus a little bit and became very PDP heavy, and still supplementing that portfolio with PUDs, but our focus of area in different basins became very narrowed. We, of course, everything's dependent upon economics and how it's going to look for returns for investor. And then also like I said, we became very, very focused. And for us, for the last couple of years, the Anadarko Basin has made a lot of sense because the economics are good. An investor is looking for typically, for us, an 8 to 10% cash on cash annually, as compared to, say, a 5 to 7% that they're getting from a real estate DST from bricks and mortar. So we're able to do that by putting together that structure in properties right now from the Anadarko. Now, if somebody presents us with a portfolio from, North Dakota, West Virginia, Marcellus, that type of thing, we'll look at it. But by the time we have to put on what I call the load, everybody wants to get their paid fair share paid, right? The investment rep and their firm, et cetera. So by the time we put that load on there, it eats into the return. So we right now are just focused on Anadarko.